Hello friends, welcome to this investment banking tutorial from Wall Street Mojo.
Research and sales and trading division actually play a very important role, and they work in a very integrated fashion. So it is equally important for us to understand what is meant by sales and what is meant by trading, because this is the heart and soul of research and trading, kind of making money for the investment bank. So let us now look at how the sales and trading department within the investment banking firm works. So we are talking about an investment bank which is an integrated investment bank where there is a research department as well as a sales and trading department. So what happens is when the research department comes out with their own set of reports, the buy and sell on a specific stocks, they talk to the institutional investors, or they send their set of reports first thing in the morning to these investors. Now these institutional investors may get convinced with the idea of trading on such securities, because they may believe on the recommendations of the research department, and they may look forward to executing certain trades. So say for example, a particular mutual fund may be interested in buying Microsoft stock of let's say to an extent of $10 million. So what happens is that when these large deals actually happen, $10 million, $20 million, etc., what investment banks must do is they must try to match the buyers with the sellers without kind of affecting the actual execution price to a greater extent. So what I mean here is that, let's say if there is an order of $100 million on Microsoft, that is specifically a very large order to look at. If it starts getting executed, the buy orders, obviously the share price will move up and up because there will be few sellers. However, the buying momentum is still on. It may reflect that Microsoft a price may jump by 5% or 10%, or I'm just speculating on that part, but yes, it may jump. So what an investment bank does in between is that they actually match the buyers and the sellers and try to keep the execution price, or the price at which they will buy, at a minimal. Now they also actually buy and sell securities out of their own account to facilitate the trading of the securities sometimes. So let's look at exactly how the sales department now functions. So we are talking about sales and trading. So there are two separate mini divisions within the sales and trading division. One, think of it as sales department. So what happens within the sales department is that think of a research division coming out with their calls first thing in the morning before the market starts. So what these sales guys may do is they may attend something called a morning meeting. Now what this morning meeting is all about is that the research and the head of research as well as sales and the sales staff would kind of attend this meeting in order to understand what is the actual calls for the day. So say for example, as I said, Microsoft may be a buy. So they hear the analysts out with respect to why it would be a buy or a sell. The sales jobs is basically to talk to these institutional investors then, and tell them that a particular stock may move up, or probably it may move down. So the portfolio manager in return may think about executing certain trades on the direction of sales force from the investment bank. So that's how basically these sales guys actually work. In between, the sales guys are also responsible for constant communication between the research analyst as well as the traders from the investment bank. So as I said, research analysts are someone who prepare the research reports with buy sell recommendations. The sales staff actually hears those recommendations and talk to the portfolio managers, and let's say if there's a $10 million or $20 million trade to be executed, the sales staff then passes this trade to the traders from the investment bank. So this is the trading division of sales and trading part. Let's see how trading actually functions now. What is the objective of trading? Essentially, as I said earlier, traders need to execute the trade, that is buy or sell the securities on behalf of institutional clients, and ensure that the execution price is at the minimal. So they are the ones who constantly look at the price charts minute by minute, and they are totally using Bloomberg terminals, and they are on the trading terminals, doing those set of executions. They trade on behalf of their own institutional clients. Many of the traders in fact are kind of sector experts. Some of them may specialize in technology stocks, the others may be in FMCG, pharma, etc. So this is the overall job of trader. Find the minimum execution price for the institutional investors. So with this, we now have clearly understood what is research and what is sales and trading.